afternoon, and thank you for joining us today. Hope you're all having a great week. Today's presentation is on our 4th annual sales tax survey results. Your presenters today are TaxConnex's partners Jeff Meggs and Brian Greer. Just a few housekeeping items before we get started. All your lines are on mute and will remain on mute throughout the webinar. As a reminder, this webinar is not eligible for CPE credit. We are providing a copy of the slides, which can be found in the handout section of the GoToWebinar panel, and a recording will be emailed out later this week. If you have any questions, please submit them within the questions box on the GoToWebinar panel, and we'll answer them as we go along. We'll do our best to get to all the questions, but if there's anything that should be answered in private or we can't get to them all, we'll respond to those afterwards via email. Thanks again for joining us, and with that, I'll pass it over to Brian.
All right, thanks, Kate. Appreciate the introduction, and hopefully, I'm sure we got a few people that have been on our webinars before. Hopefully, Jeff and I were doing a little bit better than we were last week with our colds and sicknesses. So hopefully, we'll make it through again this week without coughing through the phone on you guys there. But thanks for joining us. We appreciate the opportunity to speak with you here today, and it's a little bit of a different webinar than what we've done typically. As Kate mentioned, this is the 4th survey we've done, so it's the 4th time we've presented this. So be a little bit different content than what we've done in the past, but hopefully you'll find some of the answers and insights here interesting. And then, as Kate mentioned, we've got the handout there that I think also has some additional materials in it that we may not even fully get to today. Kind of at the back end of the presentation, there's some additional data and additional results that you might find interesting as well. So let's go ahead and get started here. I'm going to just provide a quick overview of how we did the survey. Again, you can kind of read through exactly who participated and how this took place. Won't spend a whole lot of time on that, but really kind of focus on some of the key takeaways, and then also kind of segue into some specific opportunities in terms of how to manage your sales tax compliance here in 2024 and forward. So in terms of who participated in this survey, we identified 100 individuals that completed the survey. I say identified, it was sent to multiple thousands of people. We did have the 100 or so that completed the survey, and that's the results that we'll share with you here today. Variety of industries were covered: small companies, large companies, companies in the middle, companies filing in a couple of states for sales tax purposes, companies filing in every state. So really kind of a broad cross-section of different companies that participated in the survey this year. Also think we'll have a follow-on white paper that will also highlight some additional aspects of the survey that you'll find interesting as well, and we can make that accessible to you. So let's take a look at this first slide. There's a lot of information on here. I'm not going to go through every single detail here, but you guys can take a look at it at your leisure offline afterwards. But what I will point out, I'll kind of ask you to kind of focus in that blue box, or those blue pie-shaped wedges there. At least this is kind of what stood out to me in terms of how people are managing sales tax and different aspects of sales tax, preparing and filing returns, tracking nexus, managing notices, calculating the proper sales tax. You can see that a lot of companies are still managing this process internally, and that's what the blue pie wedges are. As compared to last year, it's slightly down, so we're starting to see slightly down in terms of the percentages of people that are managing these various processes internally. So we're starting to see a little bit more of a shift towards outsourcing and leveraging third-party software, kind of moving a little bit away from the internal resources. So this next slide, when we look at how satisfied companies are with the way they are managing their sales tax process, you see about half of the respondents really just aren't happy with the way they're managing the process today. And you can see a variety of reasons that contribute to that, anywhere from just a lack of knowledge and perspective and guidance to looks like the green wedge there is probably talking about working with maybe a software provider where there's not a great deal of customer support and interaction. You know, when the tax group does have a question, you see kind of the inadequate provider capabilities. So a big grouping of it there in terms of customer support, inadequate provider capabilities, and just a general lack of knowledge and education that contributes to that dissatisfaction. Taking a look at that in a little bit more detail, we broke it out in terms of, you know, the businesses that are leveraging internal resources versus leveraging software versus leveraging outsourcing, just to see if there was any difference in terms of the level of satisfaction with those three different types of, I guess, overall methodologies of managing sales tax. And interestingly, not by a wide margin, but by, you know, a slight margin, the companies that are using the outsourcing capabilities tend to be more satisfied with the way they're managing the overall sales tax process as compared to trying to manage it, internally or through some type of third-party software. Excuse me. So this next one, it's labeled M&A activity, but it's really kind of focused on, you know, overall due diligence. Of course, M&A will almost always have some level of due diligence from a sales tax perspective. At least today it does. It wasn't necessarily that way 8 or 10 years ago, but certainly over the last few years, it's become a much more prominent aspect of due diligence, you know, the M&A activity and due diligence for sales tax. But you see some of the events that also contribute or lead to due diligence in terms of, you know, seeking outside capital, not just acquiring a company, but maybe selling your own company. So you can see a really large majority, I think it was 75% of the companies are anticipating, you know, some level of due diligence in their business specific to sales tax, which is a pretty, I think, remarkable number that it's that high in terms of, you know, that level of scrutiny placed on sales tax. Kind of continuing that thought in terms of, you know, the level of scrutiny placed on sales tax. I think we've got an audit piece here that I'm gonna skip here one, Jeff. I got these a little bit out of order. But focusing on that scrutiny placed on sales tax, specifically looking at this from an audit perspective, and you may fit into this category as well, the vast majority of respondents have experienced some level of audit activity. So I think it's just something to anticipate and something to expect, to make sure that, you know, you do have your sales tax process buttoned up. Just expect that audit activity to take place at some point, and or, you know, that due diligence. So I'm going to flip back one slide here, Jeff, and let you talk a little bit about just sales tax and how it affects businesses more at a, I guess, a macro level here.
Yeah, you know, I'll talk a little bit about this from some of my own background, having worked in a couple of larger public accounting firms and dealt with audit and other income tax folks along the way. And, you know, a lot of companies, and rightfully so, have a great deal of focus and energy placed on income tax strategies and a lot less focus on sales tax. And what's interesting about that is that when you look at the revenue sources of the states, the majority of it tends to come from sales tax revenue. And then when you look at the activities, the business activities of a lot of companies, not all companies, but a lot of companies, the sales tax remittances, or at least the sales tax implications of the business, and that can be whether you're paying tax to a vendor or whether you're collecting tax from a customer, those numbers tend to far outweigh the income tax liabilities that exist. What's I think equally interesting about sales tax is there can be some strategies to try to mitigate or minimize those risks and those exposures, liabilities, but they're not nearly as available in terms of different options as you might have on the income tax side. So it makes sense that a lot of our tax determinations or tax focus tends to be on the income tax. But we can't lose sight of sales tax. As Brian said, it is becoming more and more a factor during due diligence. We hear from not only clients, but also partners and firms across the country that we work with. We hear this same story, that their clients are becoming increasingly scrutinized when it comes to sales tax. And the reality is that a lot of times those companies aren't really prepared for that due diligence. And so what I want to talk about here is just some of those preparations, some of those things to really think about and understand as it relates to sales tax. And, we kind of walk through a couple of steps when we think about sales tax and exposure and due diligence. The first step being nexus. Nexus meaning, do I have an obligation to comply with sales and use tax laws in the state? And, if you look at the history of sales tax from a nexus perspective, it's primarily been driven by physical presence. However, as most of you, maybe all of you know on the call today, we now, for the last 5 to 6 years, have had an economic nexus standard. So the message is, nexus is easier to create than you might think. You probably have a nexus in more states than you realize. And for some of you, that's okay. That may not be creating a huge risk, but it's also just important to understand, where is my nexus footprint? The economic nexus standards are really the way to think about them, or the way I ask my clients to evaluate it is, if you're exceeding $100,000 in revenues in any given state in any given 12-month period, it's time to take a look at that state and understand, have you triggered nexus? Have you met the economic nexus standards? And should you be starting to think about possible compliance? Again, having nexus in and of itself doesn't necessarily result in a compliance requirement, but it is kind of that first step. I won't go into a great deal of detail about economic nexus. We do talk about that in a lot of our webinars, and if you have questions about it, we certainly are happy to answer those today if we can, or as you tune into other webinars, you'll hear a little bit more detail about that. And as Brian said, when we think about the implications of sales tax, there are kind of two places where that rubber meets the road. One is you're going through an equity event. You are anticipating or likely to encounter and experience a level of due diligence that's going to include sales tax. And then the other side of the equation is the part that's always been a challenge for us is audits. The states haven't hung up their cleats when it comes to doing audits. They have sort of stopped doing a lot of travel, so a lot of audits today are done remotely or electronically. And what we really are starting to see a little bit more of, and this is, I think, in reaction to or on the heels of the Wayfair decision and the economic nexus standard, is we're seeing a little bit more inquiries, questionnaires that are coming out of jurisdictions that we didn't used to see a lot of questionnaires before. And when I say questionnaires, I'm just referencing letters that go out to companies that are exploratory in nature. They're basically asking questions around whether or not that company's activities meet economic nexus standards or still physical presence standards. The physical presence standards didn't go away. The economic standards just have given us a little bit more of a bright line test in that regard. So you've got these two, pending realities of every business. One of them might be that you're going down a path of an equity event. You're going to have some due diligence. The other is, at some point in time, you have to expect an audit's going to happen. A state's going to knock on the door, and you're going to get an opportunity to share your argument as to why you're not in compliance, or maybe share why you are in compliance and how well you've managed it. So Nexus, yes or no? Do I have it? Do I not have it? If we assume we have Nexus, and we might not realize it until today, maybe we've had Nexus for a number of years. What does that mean? Should I panic? And the short answer is, let's not panic yet. Let's then evaluate sales and use tax applicability, because even though you might have Nexus, and for example, our business clearly has a physical presence here in Georgia, but we don't sell a taxable service here in Georgia, so we don't have to charge tax to our customers. And that could be true for many of you. So the next step is really evaluating the taxability of your products and services. And we have variations across the states in terms of the level or degree to which services are taxable. In all states that have a sales tax, and when I say that, I'm very specific when I say all states that have a sales tax, there are 5 states that don't have a state sales tax. Those states being Alaska, Delaware, New Hampshire, Montana, and Oregon. Alaska is kind of an anomaly because they do have city-level, self-administered city-level sales taxes in Alaska, but the state of Alaska itself does not impose a sales tax. So within that framework, we then have 45 states plus DC. We kind of treat DC as a state when it comes to sales taxes that do impose a state-level sales tax. And across that spectrum of states, there is variety in terms of which states tax services and which services are taxable. It's always the case that a retail sale of tangible personal property to an end user consumer is going to be subject to sales tax. There are other services that are almost certainly to be taxed. For example, telecommunication services. Those tend to have some level of tax treatment in almost every state. But when you get into technology and professional services, that's where you start to see states drop out in terms of applicability. But what makes that challenging is keeping up with the rules and the regulations of each state and understanding what is taxable and what isn't taxable. For example, you might deal with a state that taxes downloaded software, and if you also have a mandatory maintenance agreement, that's taxable. But if the maintenance agreement's optional, it's not taxable. So there's just a number of criteria that have to be analyzed, and that's sort of the next step. I have Nexus, now do I have taxable sales? And then on top of that complexity, we have, in addition to state level taxability, we've got a lot of local tax rates to deal with. Some of those tax rates are with those jurisdictions like I described in Alaska. They're home rule, self-administered jurisdictions. But the vast majority of these local taxes are administered by the states. It's just that depending on the situs of your transaction, where the sales tax applicability is deemed to have occurred, you've got to get your systems and your processes in tune with that to a degree that you can be precise in applying the appropriate rate, depending on where that transaction situs. So as you can see, it's really complicated when you look at it in a comprehensive sense. You know, some companies only have Nexus in a handful of states, so their spectrum of evaluating taxability is fairly small and manageable. Some of those companies can manage that compliance level manually. And as Brian pointed out, I think that's why we still see the vast, or at least maybe 50% of all companies out there do try to manage it internally. Where it gets complicated is adding more and more states, you end up dealing with more complex laws, more complex requirements, and ever-changing laws and requirements. And so you do have to think about getting more sophisticated, and that's when you start needing to leverage third-party tools. So I think when you look at all of this, and I think the Wayfair decision is probably the catalyst, the states, it's easier for them today to kind of cast that broad net across the spectrum of businesses out there and ask key questions. There's a lot of companies out there that are really nervous. A lot of them probably realize they have Nexus, probably believe they have some type of risk and exposure, and they very well may not. But there's sleepless nights nonetheless. And then there's some that aren't paying attention to it, and it sneaks up on them. And due diligence and audits is not the time to recognize you've got risk and exposure. At that point in time, you're not in a good position to mitigate it.
Yeah, and I think, Jeff, as you were describing that, the increase in complexity, the number of states, working with perhaps a set of products and services that have an extremely varied tax treatment from state to state. All of this creates that complexity that almost requires some type of sales tax software for businesses. Again, the more states you're in, the more variation you have in terms of the products that you're selling, software as a service, as Jeff mentioned, with varying tax treatment, telecommunication services with various tax treatment from state to state. You really start to find more and more companies utilizing that third-party software to automate at least the calculation of the sales tax to get that applied to the invoice correctly. However, that doesn't necessarily solve the entire sales tax compliance process for businesses, meaning that software, there are things that it cannot and does not do effectively. And that's really what this particular slide is focused on, is in those scenarios where you're utilizing and leveraging that third-party software, what are some of the gaps that you see? And this mirrors a lot of the conversations we have with businesses, especially on the managing notices and managing the tax calendar. You see some of these other areas that become a little bit more, not necessarily manual, but something that the business still has to do. And I'd liken these sales tax calculation solutions to kind of a do-it-yourself sales tax process. Not necessarily bad, it just means there are certain pieces of the puzzle that you still need to be responsible for, and not just expect that the software is going to do it all for you. Just a quick example as to what happens if you're not fully paying attention to what's happening from a sales tax perspective. We talked with a business a couple weeks ago, started to help them through an issue that they were experiencing, and what had happened was that they had received or learned of a lien placed on their bank account by a particular state. In this scenario, I believe it was South Carolina. And what had happened was that the software company that they had implemented failed to file sales tax returns for 12 months. So the company by the state were set up as a monthly filing frequency, and somehow they were set up incorrectly from a filing frequency perspective within that third-party software. They were actually set up as an occasional filer, meaning that they would only report sales tax due when they had a sales tax event in the state, rather than set up as a monthly filer. So the state issued notices every month for non-filing that were posted in the e-file website. Nobody was watching this, nobody was paying attention to it, and eventually those notices escalated to a lien. So the client had to go back and file all of those back returns, try to seek some relief from a penalty and interest perspective. But just an example of the software is very critical for certain aspects of the overall process, but it doesn't necessarily do everything and solve everything for you. So looking at this next question in terms of what are some of the key challenges and barriers to managing the sales tax process. Probably not too surprising here in terms of, if you're trying to manage this internally, it's really, really hard to get access to the expertise or hire the right type of people to manage this process for you. And it's also tends to be, a bandwidth issue within businesses. A lot of the companies that participated in this survey, especially those that are smaller in nature, they don't have a tax department. So sales tax is managed by the finance department. That's why we were surveying the financial professionals in these businesses and not necessarily looking for the tax directors, because probably similar to you, you probably don't have a tax director in the business. It's probably a finance person that has a lot of other items on their plate, a lot of other tasks that they're dealing with, and it's just really, really hard to find good resources to manage this process for you. So I'm reading this a little bit as we go here. A large majority of the respondents, again, had trouble attracting and retaining the sales tax talent. Again, I think is what we're seeing from that initial aspect of companies still, I don't want to say to a large extent, but they are managing it internally, but these dynamics in terms of access to resources and not having the bandwidth is really what's starting to cause that shift towards leveraging the third-party software as well as leveraging more of an outsourcing model. So kind of continuing that thought from an outsourcing perspective, we asked the respondents, what aspects of the sales tax process are you most likely to outsource? And you see those listed here. This was a little bit different than what we had seen from prior years. I think in prior years, keeping up with nexus and taxability was the key, or the one that companies were most likely to outsource and struggle with, and filing the returns wasn't that significant of an issue. I think what was behind that is, I think surveys in the past, we probably had a larger group of smaller businesses that maybe weren't already filing in 30, 40, 50 states. They were these smaller businesses that were really just kind of coming to terms with economic nexus and starting to realize that, hey, I really need to be paying attention to where I have sales, where I'm crossing these economic nexus thresholds. That was kind of the focus of those businesses. Whereas I think in this survey, the companies were a little bit larger, had a larger existing footprint in terms of where they're filing, and thus the desire to outsource the filing was a little bit more prevalent, in this group of people that we not necessarily talked with, but participated in the survey. In terms of why companies outsource, and this question was oriented not just sales tax specifically, but looking at other aspects of your business. Why would you outsource, and why do companies outsource? Again, probably not a big shocker here in terms of why companies are looking to do this, but lack of internal resources, also attempting to reduce costs is oftentimes a big reason for outsourcing certain processes. Gaining access to that expertise that has been really difficult to, again, find and retain and hire those sales tax resources, at least specific to why outsource sales tax, but that's a typical reason for outsourcing really any process, is to gain that access to expertise that might be concentrated within that outsourced provider. So what's the kind of the key takeaway here? We've kind of summarized here for you, but again, it's something where, as Jeff described, the sales tax process, it's not getting easier. It only becomes more complex, and we're also seeing not just sales tax, but other tax types that are getting introduced into this that you're having to manage. the Colorado retail delivery is a good example of a new tax type that was introduced that, I don't want to say it's a sales tax, but it's kind of a transaction tax that has to be managed almost similar to a sales tax. But we're seeing those types of complexities introduced as well. There's other states that have introduced a similar retail delivery fee. So you've got this complexity that, again, it's not going away. Streamlined sales tax has been around for how long, Jeff? 35, 40 years?
Gosh, it's at least 24.
24. In its current form, I think there's about 23 or 24 states that participate in the streamlined sales tax program. My reference to the 30 plus years, I think there's always been discussion about how can we simplify sales tax, how can we make it easier, and I think in reality, if you look back on it, it's more complex now than it has ever been. I'm a skeptic as to the sales tax simplification. Just from experience, it just seems like it gets more and more difficult and complex for companies to manage. But I think we'll continue to see a push towards or a migration towards, leveraging sales tax specific software to at least automate portions of the process. Also leveraging, outsourcing providers to either fill in the gaps or to also, manage specific portions of the overall sales tax process. So Jeff, I don't know if you've got any kind of final comments or thoughts here.
No, I think despite the fact that there's a little bit, every year over year, there's something a little bit new that I think we see, but at the same time, it's not dramatically different. I would say that as our business penetrates different markets, different industries, we're always seeing something a little bit new, something evolving, and it might be evolving in the way of technology. So industries that are heavy into technology, and they're starting to do things that are just different. SaaS is something that we're all very, very familiar with, has been around for quite some time. But the variables in terms of the types of services that are closely associated or related to SaaS, it's impressive how many new companies are coming up with new technology. And Brian and I struggle frequently to just interpret how the statutes apply to these new technologies. So the world's changing. Sales tax is not necessarily keeping up, but it's, as Brian said, it's becoming a more complicated factor in how you manage business.
Yeah, sounds good. We'll go ahead and wrap up here, but I mentioned before, I think you've got access to the handouts here through this webinar, but there will be, and I don't know, I'm putting Kate on the spot, is our ebook complete yet in terms of the more deep dive into the survey results, or is it kind of pending over the next couple of weeks?
It'll be coming out in the next couple of weeks, so just keep an eye out for that.
Okay, and that'll have a lot more detail. We just kind of highlighted a few key pieces here, so keep an eye out for that, and I'm sure we'll be able to send you guys a copy of that as well. So you see the poll here. Just let us know if you'd like more details either on the survey, or if you want to talk with Jeff or I specifically about a sales tax challenge that you might be having. We'd be happy to follow up with you guys and take a look at that and see if we can help you in some way. So Jeff, we made it without coughing.
No coughing.
I had a little one in there, so I think we're good to go. Thank you everyone for joining us here this afternoon. We appreciate it. Look forward to talking with you again soon.
Thanks everybody.